Welcome to the episode. So, what are we talking today?
Today, we are going to talk about the rise, fall, and the resurrection of Yes Bank.
Or as they call yes, no, maybe bank?
Flashback to the golden days. Launched by Rana Kapoor in 2003, Yes Bank was like the Ranveer Singh of banking. Bold, flashy, promising, and everyone's favorite.
It started at rupees 12 but shot up to a lifetime high of 404 in 2018.
Yes Bank, oh yes, they said. Until
2019 and 20 happened, the bank couldn't raise enough capital, loans went bad, and suddenly it was like that cousin who borrowed money and vanished.
RBI stepped in and said, enough is enough, time for adult supervision.
Yes Bank share price fell faster than New Year's fitness resolutions, from 400 to single digits. Even Maggie was more expensive. Retail investors were left holding the bag and the bag had holes.
Were you holding Yes Bank shares or are you holding now? Comment below and let us know.
The story doesn't end here. Like every Bollywood hero, Yes Bank also had a comeback story. See this.
Okay, so let's start by looking at the monthly chart of Yes Bank. You can see that it was listed at around rupees 12 and it then went up to a lifetime high of 404 in 2018, which is 34 times the launch price at IPO. However, after the financial debacle, it crashed to single digits. Currently, the stock is trading in the range of 16 to 20 rupees. One important point to note is in the recent times, you can see there's more interest in the stock and the trading volumes have gone up. Now, coming to some of the fundamentals of this particular stock, you can see that the revenue of Yes Bank went from around 20,000 crore in 2021 to almost 31,000 crore in 2025. And that is a CAGR of around 11.5% year on year. This particular stock is currently trading at a price to earning ratio of 23, which is, I would say, reasonable, not so good, not so bad. Now, if we look into the profit trend of Yes Bank over the last 5 years, you will see that in 2021, it was sitting in losses. However, after that, it has reported profit every year. And in 2025, it ended up with almost 2,500 crore as operating profits. A very interesting data that we must notice is how the institutions, the foreign as well as the domestic institutions, FIIs and DIIs, are increasing their shareholding pattern in Yes Bank. Here you can see the March quarter data, March 2025 quarter, and you can see FIIs have increased their holding from 26.74% to around 26.87%. DIIs have increased their holding from 38.8% to around 39.5%. So put together, institutional investors have increased their shareholding from 65.5% to around 66.4% in that quarter. And guess who is reducing their shareholding pattern? The retailers, the public is actually decreasing their holding from around 29.9% to 29.2% in the March 2025 quarter. Any guess whose footprint we must follow? Is it the institutions or the retail public? Let me know by commenting below. Now we will have a comparative analysis of Yes Bank versus SBI, State Bank of India, which is the largest public bank in India. We will look at the Pietrossi score, which is the indicator of 9 different parameters under which the fundamentals of a company is evaluated. And here, Yes Bank is slightly ahead of SBI, scoring 6 compared to 5 for SBI. But if you look into the CAGR growth for revenue as well as operating profits, you will see that SBI is much ahead of Yes Bank in spite of having a much larger base. Do you know what is the price to earning ratio of SBI right now after it has corrected over the last several months due to FII selling? Let me know by commenting below. And also let me know, is it a good buy right now? Over the last few years, revenue up, profits up. Institutions started saying, maybe we judged too quickly.
The bank cleaned up its balance sheet like it was preparing for Diwali guest. Even big mutual funds said, let's try this again.
And now, a twist in the plot. a foreign bank might be taking over and everyone's excited again. Few days ago, Japan's Suitomo Mitsui Banking Corporation was reported to be in advanced stage for acquiring 51% majority stake in Yes Bank, and the stock shoot up. Yes Bank, however, denied this letter, stating that they're in continued conversations with many stakeholders and hence it is too early and such news is speculative in nature.
Retail investors are like, should I buy this? Is this the trail we were waiting for?
Yes Bank Season 2, the banker strikes back.
So what's the lesson here? Be cautious. Stocks are not samosas. Just don't grab them because they are hot.
Do your research and remember, past drama makes for great gossip, but not always great investment. We are not recommending anyone to buy or sell Yes Bank shares. But you can always watch the shares, how it is moving and how FIIs and DIIs, the institutions, are changing their shareholding pattern in Yes Bank. If you decide to buy, divide your capital into multiple parts and then buy in phases during dips only if the overall trend of the stock is positive. Have strict stop loss even for investment purpose. Please consult your financial advisor before taking any decision.
If you want to check out Yes Bank with a very small portion of your capital for a quick ride, that's understandable. But if you want to invest well and long term in fundamentally good stocks, then SBI is a better choice than Yes Bank any day. Let us know what you think in the comments below.
If you like this episode, hit the like button like it owes you money.
And subscribe for more spicy finance stories minus the hard work.